Appreciate everybody who's showing up on this late night. Trying to get more education. Like I said, every single stream, you guys are here working. The fact that you're here watching this, listening to me ramble in front of you guys, already says that you're going to be better off traders than 80 to 90% of those who you are trading with. So I applaud all of you. And let's get this started. We're going to be looking at Bitcoin and ETH today. We're going to be looking at some gold. We're going to be looking at GU. It's going to be a lot of charts that we're going to be looking at. We're going to talk about the continuation and the disapproval theory, something we'll go over again. As me and Joe were talking about earlier in stream when we first got in here, it's going to be a lot of repetition. It's going to be a lot of the same thing because there is no bells or whistles. This is the model, right? This is what was given. This is what we've learned. We understand the narrative, how we can get into place, right? So now it's just seeing that. Now it's just the repetition, right? Make it a job, make it boring, make it the same exact thing. Because that's what it is, right? Sit down at the charts, in and out of your trade at a certain time of the day, whatever it is, make it your job. That's the goal of trading, right? If you are trading to get rich quick, then you're not going to make it. If you are trading to win the lottery, right, you're not going to make it. Why do you think lottery winners can't maintain the money that they have, right? 80 to 90% go broke after they win the lottery. The same exact thing is going to apply to trading, right? If you can't manage a $10 portfolio using risk management, right, how are you going to be able to manage $1 million portfolio? It's the same exact beliefs, same exact narrative that we want to look at. So when we want to make this as a job, like I say every single stream, we want to make it boring, we want to make it repetitive. So we're looking for the same exact things. But we're gonna go ahead and get into Bitcoin and ETH first. Just talk about our structural narrative, where we're at as far as where we believe direction could possibly go. Um, and then after that, we're going to get into the XAU trades and get into the continuation as well as disapproval theory. So, looking at our daily chart, right, we always do our top-down analysis from our higher time frames to lower time frames. So, looking at our daily chart, we talked about those daily equal lows we had mentioned, right here. Talked about the institutional candle as well down here with the fair value gap present that brought a new high out of the range that we could possibly come down and mitigate after liquidating some lows, right? That would put us back in, let's draw out our fib from our low to our high, right? Back into discount of our entire range. If we manipulate lows, take out these lows, mitigate this demand, right, and start to show that bullish structure, we can look for a higher continuation into supply higher. But let's look at our most current narrative, our most current structure, because we talked about this before, right? All right, now looking at our 12-hour, right, we're just making literal highs and lows. Not very clean at all. Both sides looks like we're manipulating highs, leaving more lows. So this could be more of a accumulation to then distribution, which would fall into the narrative of the LPSY following our distribution that we had occurred right here, right? Brought us that large displacement candle down into these areas as well as into that liquidity, right? That we were looking at as well. All of these lows that are starting to be created at these areas, right? This gives us multiple reasons, right? Multiple narratives to now come down into these areas, liquidate these lows, possibly mitigate this demand, or continue to the downside overall and go for that overall monthly, right, liquidity that we had in place as well from these lows here. Come down to fill some imbalance, right? Take out the lows, take out a lot of longs. Everyone says we're going to zero once that happens, right? And then we see that liquidation rate, breaker structure to the upside, and the move from that. But looking at our most current narrative, looking at where we are at right now, I'm not taking any trades as far as how this looks, right? How we want to get into certain trades. Yes, you could start to look for possible shorts, right, from our internal breaks of structures downside the structure supply, that we have currently been respecting after manipulating highs, leaving these lows that we can see, right, our clean lows. That is occurring over and over again. What does this tell you? Retail is starting to get comfortable in longs, right? They look at this as a bear flag breakout, whatever it is. Looking at something like this, right, putting their stops underneath these lows after this move occurred. They thought it broke out, whatever it is, right? The fact is there is liquidity that lies beneath these lows. So if our structural narrative is following the same, we're respecting supply and breaking structure to the downside, then we now have a reason to as well, right? And then everything starts to come to place then. So Understanding we are manipulating highs, leaving those lows, accumulation to possible distribution, looking for that LPSY, right? That redistribution, following that distribution scheme that we had right here. We could come down into these areas of demand, fill these imbalances, take out these lows, take out all longs, go back into discount of our range, right? And then start to manipulate lows, leave those highs, and move higher if price wants to do that, right? So if we are something that I have wanted to kind of iterate, and this is just as a tip, something that I have noticed personally, right? If we are in these situations like this for a short scenario, we want to see a lot more longs out of trades. Now, what does this mean, right? We want to see more of a buildup into areas that sponsored this price lower, right? Into areas of supply where institutions entered to sponsor price lower to then look to take our trades, right? We would want to see something more like this coming up into our areas, leaving those lows, right? Manipulating the highs, and then we wait for the mitigation. We see the move off. We wait for the liquidation, the introduction, right? Our break of structure, and then we can then get in the trade, look for that area of supply, targeting those areas lower. But in certain instances like this, right, obviously it hasn't fully played out yet, so I can't sit here and call anything. But in instances like this, where we drop down into areas of demand and start to leave a lot of lows, right? What do we want to see right before our zones, whether it's demand or supply? What do we want to see as traders, right? We want to see that slow approach, that manipulation into that zone, that inducement to get traders to go the other way, right? They want to see that slow grind into these areas, liquidating these lows. What does that do? That gives reasons for price to come up. So once it does mitigate those areas, break structure, all this liquidity that has been created from this downside move right here is now available. So we have our break, our area of demand, and then price flies, right? That's why we see price move quickly as it does, for that structural liquidity that is available. When you have those times, right, where price just creates clean lows and highs, like in this scenario, a bearish scenario that we can see right here, where it's creating a lot of buy side liquidity from an overall bullish perspective, it's giving reason to go higher, right? Same exact scenario here. We want to see reason for price to continue lower within this certain scenario. So that was just a little tip as far as what we want to see as prices coming into our zones, right? But let's go ahead and do ETH now. Very, very similar story. So let me go ahead and get rid of these. Go over to ETH now. Alright, I was marking that our 4 hour, right, was still holding bullish structure at the time that I was asked about this setup, right? Asked how the structural narrative is, how it is working. So this red line that I have on here is a daily market structure that I have drawn out, right? From a move to the upside, right? We took out the highs, took out the buy side liquidity, took out the early shorts. I'm gonna have to mute you, sorry, brother. But then after that happened, right? We took out that buy side liquidity, came lower, broke structure to the downside. We need to now confirm that with an H4, right? So how are we going to be able to do that? Let's go ahead and bring this back. Let's look at the H4 now. Understand where supply is created and why continuation theory is important as it is, right? Because if we are getting into situations to where we see a large impulse or a large break of structure, right? And let's just draw this out. We get something like this where we get a large impulse and you see that break of structure, that move out, right? Creation of demand, and then you have your next demand that is created, and everybody's eyes automatically lock here, right? And then you're stuck in this situation to where price gets in this scenario, starts to distribute, right, to the downside, and then instead it just liquidates lows, breaks structure, and then continues, right? You have your reaccumulation that then occurs. How do we understand how this happens, right? How do we understand to not get into this theory to where it's just higher low, higher low, higher low, higher low, right? Because that's that same exact mindset versus understanding how price is delivering through Wyckoff, right? Through our manipulation schemes, because this is simple, right? This is very, very simple. Anybody can look at this and long each higher low that occurs over and over again, right? That's just as simple as it is. As a market manipulator, as somebody with a lot of money, right? How are we going to make any money in this situation right here? We're not. We're going to need to manipulate that, right? Because I can't buy, or I have to buy at my own position, so I need liquidity available in the market to make any money at all, So understanding that we need to get rid of this mindset and focus on the continuation mindset. Where is price moving in its structural narrative, right? As far as premium and discount goes, and then watching structure as we develop. So we look for the early longs to be taken out of trades before the break of structure, the impulse, the introduction of demand, and then we can then take it higher. Opposite goes for the other side, right? Our break of structure, following the impulse, right? We wait for the early shorts to get out. We now have a supply zone, a clean supply zone to enter our trade. Once we enter our trade, we are good to go, right? So same exact thing talking about this, we're applying it to this now. So in scenarios where we have these large drops to the downside with large displacement candles, right? A lot of people can get into this mindset where we automatically go up to this high or automatically go to this candle before this candle that broke structure to the downside, and we can miss opportunities because we're not understanding the structure, and we get laser focused, right, on our areas right here. So understanding that we have a daily downside, possible break of structure, we can confirm it with an H4 structural break, right? Let's go ahead and just get rid of these to make the candles clear. But I'm looking for a low that caused a high on H4 to be broken. That would show me introduction of supply if we have a displacement candle, right? Because then we are now able to get into these situations where we are entering the actual redistribution, which is a creation of supply after we liquidate all early shorts. We create new supply instead of going back to mitigate supply that caused this move lower, right? And then we start to move lower from that. Those are those areas with reaccumulation where we create demand instead of going down to mitigate areas of demand, right? Where a lot of traders get confused. And continuation schematics, right, our rally-based rallies and our drop-based drops are deemed the literal hardest to play, right? The literal hardest to spot as well, due to the amount of manipulation they have. With reversals, with distributions and accumulations, it is just a distribution, right? And manipulation of highs while we leave lows. With an accumulation, it's manipulation of lows while we leave highs, right? With a continuation for our redistribution, it is a accumulation to then distribution. So we manipulate lows, leave highs, take out those highs, start to manipulate highs, leave lows, and then break structure downside and create new supply. It is 2-in-1, and that's why we start to get really confused, and that's why they're deemed the hardest, right, as far as continuation goes. But we're going to go ahead and show XAU here and how we can spot that just through structure, understanding our time frame to time frame narrative, right? But that same theory is going to apply to this. So if I can see highs taken out, or if we respect this high that caused the new low, break structure on the H4 with displacement, then I'll look for lower prices into areas of demand, right? But right now, not a lot of structure has formed. There's no footprint, there's no wave, so I'm not going to surf. That's personally how I look at it, right? So now we're going to go ahead and go to XAU. Understand what happened most recently. Let me get rid of all of these alerts. Just delete all of these. Sweet. All right, so a certain trade narrative that had occurred today ran for 1 to 16 before I was stopped at break even. Came actually back up to here, stopped me out at break even. So let's bring this back. Let's not make this look all good because it was not up here, right? To understand what happened, how the structural narrative came to play, and how the continuation theory came to play, right? Because again, we were talking about how we can get stuck in the demand zone or supply zone at the top, right? Or people are looking at the institutional candle, the buy before sell candle, or the sell before buy candle. Does it always have to be a certain look, right? No, it does not. We're following the market structure, following what it's doing, and understanding that we don't have to be right is going to be one of the easiest things. You do not have to be right. Um, Start to test yourself, right? If you don't enter the trade because you are afraid or whatever it is, start to test yourself. Throw out the play. Throw out something like this and just watch what happens. Paper trade it, right? Um, just start to get in it yourself. You have to get hands on and actually start to try to understand how these theories are going to apply. Otherwise, I could sit here all day and talk about all of this stuff and you will never retain anything, right? There's people who are in certain groups, right? Traders who have been trading for almost 10 years who are still unprofitable because they don't want to do the work, They want to be lazy. They're looking for other situations, other ways that they can get rich quick, right? But when does that work in life? Logically and realistically, when does that work? It does not. And those who do, how do they maintain it? They do not, right? It's very devil's advocate type of situation, but understanding what we did here, right, as far as the psychology goes, as far as gold goes. So if I want to get rid of all of this, let's just go ahead and group this. Right, we talk about the continuation theory. We talked about the disapproval theory. We know what they are. Now let's see them in action. How does this work now, right? So down here at these areas, and I'm just going to go on replay mode. Let's understand what we were looking at before this long came into play. Looking at our range, right? Let's go to the daily chart. We had a daily break of structure to the downside here. Area of supply that was created right at the top here. I don't believe we have mitigated it yet. We're just using internal structure right now, but we created this area of supply. We were starting to pull back to it, and at this point in time, I had drawn my premium discount from my high that caused a low. Go down to my lower time frames, and let's look at this, right? Obviously, we are in a higher time frame downtrend, right? Obviously, this is bearish, all right, from our weekly to our daily to our 12-hour at this point in time, right? It is bearish. So we are looking at this and we are saying, okay, how can we now enter this certain type of trade if we get into these areas of supply, right? Well, we're going to need our 4-hour to show that bearishness. But has it shown that bearishness? And this is what I mean, right? We're looking at structure for how it is building as we are going up to these areas because we see this and we automatically say short, right? But this is a scenario where we don't look at this internal structure from a liquidation rate to the downside here, right? Mitigation of this fair value gap, this imbalance that we have right here that brought a break of structure from a high that caused a new low with impulse all the way into our area of supply. So this is obviously a very, very vital area that sponsored this move to the upside right here. We're looking at the story, the candlesticks. How did this happen, right? How did this come to fruition? So we came down into these areas right here, right? And then after we had mitigated that, we showed 4-hour bullish structure. We created a high, created a low, and then created another high. We are creating higher lows on the 4 hours. So if I want to take this trade to the downside, I'm going to have to wait, right, until the 4-hour switches bearish with displacement, and then the 1 hour, right, up until that point. But looking at this, right, if we're just trying to play a range, trying to play however this is, for that continuation theory, right, understanding that we are still holding an internal bullish narrative, understanding that we are still respecting certain areas of demand, and understanding, right, sorry, Hoochie, go ahead and at me if you want to talk, which I understand you do. If you want to ask questions, anything like that, go ahead and just at me in chat, and I'll go ahead and unmute that. Apologies, but I had to quiet you there. But looking at this, right, we had a distribution, so we manipulated highs, left lows, and then took that to the downside right there, right? And after that happened, we have this displacement candle that happened to the downside right here. We'll go to the 15-minute time frame, right? Our hourly is still holding bullish structure. So from this low to this high, we are still bullish overall. Now let's look at the range we created in here and understand how that works as well. Because we have this break of structure to the upside right here, right? Of this internal range. So this high that caused a low was broken to the upside by this introduction of demand within this candle here. We are currently filling that fair value gap, right? Filling that area. Now we need to look for that break of structure to the upside after we manipulate lows, right? For the continuation to the upside. We're looking for continuation to the upside at this point in time, right? To our areas of supply that cause the low. So we're looking at this and we're saying, how did this work? How can we get into this trade at this point in time? Is there that footprint? Well, not yet. So I'm looking at this, saying, okay, I have my premium and discount for this move right here, right? I have my area of longs. We just took out the shorts, and we did not break this high right here. So this low did not break this, or did not sponsor a new high, right? So this is considered a weak low at this point in time. I can expect this to be taken out. So we'll look for areas of demand lower within the range, right? Which is completely fine if it comes down to those areas. So if we go ahead and play it out, it makes a couple candles, and then we see this liquidity rate. I don't see any displacement or anything similar when we come into these areas at all. Now let's look at this again, right? We get the raid, and then we get the move to the upside, right? You saw that impulsive move to the upside right there. So now we see the start of that, and we say, okay, where did this occur? How could we have gotten into this trade at this point in time? Let's look at the 5 minute. Let's see what happened when we came into these areas, right? So we created the high. We had the weak low. We came down into the weak low. We liquidated those lows, and then after that, we broke structure to the upside. So the liquidation of the lows to the downside had also gotten people, right, into shorts. So where was that algorithmic introduction, right, that institutional candle that pushed that price down and said, okay, we're going to liquidate these traders as well as make everybody believe that this is going to go short. Look at all this space, right? This is what they see. Where did that happen, right? Right here with this displacement candle that was immediately bullishly engulfed following, right? So if you mark the entire candle, we can understand this is an area of institution, right? We can go to our lower time frames. We can see the same exact thing. So once we come up into this area, we see an accumulation, and then even some Wyckoff traders who try to get into that narrative, right? If they're only looking at Wyckoff or only looking at patterns, they get into their beliefs, whatever it is, right? And they say accumulation, distribution. I'm on a 1 minute, right? We broke structure to the downside with displacement. I'm sure there was volume during this time as well, right? They see maybe a redistribution, accumulation, distribution. After this distribution, they're like continuation downside. But we need to understand we're still bullish. We liquidated the lows. We didn't show any displacement underneath these lows, right? Underneath this area of demand, underneath this candle, we just came into our 50%, right? And then what happened? We showed that bullish engulfing on lower time frames. We showed that break of structure on the 15-minute time frame. We're looking for the 5 now, right, when we come into those areas. And then we see that continuation higher. So we're looking for price delivery into the area that caused the higher time frame low, right? We're looking for this overall. But at this point in time, we're in discount with bullish hourly structure, right? 15 showed the same exact thing. So we're looking for that price delivery to now in these areas, that continuation to the upside instead of people, so now instead of coming to the chart, right, and seeing this move right here and saying, all right, demand zone right here, right? I'm going to wait until that occurs. There is nothing wrong with this. I'm going to tell you that right now because there are scenarios, right, with our institutional candles that we do end up coming back. Price could easily leave this, come up to this area, right, and then start to come down and create buy-side liquidity into our areas of demand and then break structure and then start to go higher, right? It could do this. So I'm not going to tell you this is wrong, but I'm going to show you how we can get into trades that leave us, right? We have our area of demand that we could have marked out right here, and then we're looking at it, waiting for it to come down into these areas, and then we see that 15-minute structure break. So that now puts me with my hourly to now my 15-minute within that same exact narrative now, right? If you want to look at that candle before, you're looking at this candle with this wick right here. We showed the 5-minute institutional candle, right, when we came down into that zone. And now let's watch that price delivery. Let's see if that price delivers up into that area with all of this buy-side liquidity present, right? And the bullish structural narrative into the area of supply. So overall, this is still bearish, right? We're looking for a lower low, lower high, continuation to the downside. Let's watch price now, right? We see us in there, and then we see that break upside. We see price start to move upside. We're manipulating lows constantly, right? But look at where price broke structure to the upside right here, right? So what sponsored this low, or sorry, this high, this strong high to be broken? This low right here. So as long as we do not breach this low that caused this new high, we can see continuation. All of this price action is pure manipulation, right? On lower time frames, you could have been sitting here and saying, I have no idea what is happening. I don't know what trade I'm going to get into. But let's look at that price delivery as we went into that area of new demand, right? Right here, when we were distributing, how is price moving, right, to the downside? Literally just looking at it quick, right, with impulse, with possible displacement, right? We can see those strong moves to the downside. And then what happens when we come into this area and then break structure upside? So let's just get rid of these. Right, what is that price action showing from here, right, compared to this downside price action right here? We go and take a look at this, right? Our institutional candle that literally sponsored the entire move from the 5 to the 1 minute, something like this, right? But you see that break of structure upside, and then you see price start to show that buy side liquidity is creating those shorts. It is creating that idea that shorts to the downside are a good idea, right? Clean highs and lows, clean lows to the downside, clean lower high, right? Clean lower high. They're just like short, 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 short. Retail sees breakdown to the downside after this move occurs right here, right? And they are getting into their positions, trying to continuously take this to the downside, putting their stops over these highs, right? Or they could have been putting it down here, whatever it was. But the narrative is, what's the most external point, right, that they would place their stop losses at this point in time? Let's say you got in a short right here, and you are a retail trader. You are looking at this, retail as in you're gambling. You just decided to take this to the downside because it looked like it was going to go down, right? Let's look at this and say, okay, I'm going to take it to this low right here, right? So they want that, it's not even going to be INR because I'm about to show you what's going to happen, but they want that large move, right? They want that big move. They want to look at it and say, I know what I'm doing. I can show everybody, right? I caught this huge move. But at the end of the day, were you profitable, right? That's what really, really matters. Are you profitable, and can you be independent? Can I take away everything? Can I take away your Discord? Can I take all this stuff, right? And can you be independent, and can you make those trades yourself just by focusing on this, right? But retail gets into this mindset. The uninformed, the dumb money get into this mindset. The people who think that they know what they're looking at, right? When the institutional traders, the actual smart money, understands they don't know what they're looking at, which is one of the craziest things I had to tell myself, right, and had to learn and drill into my head, because it is a very precise and very it's just precise in general. It is a very articulate, right, state of analysis that we get into as institutional traders, with a lot of different terms, a lot of different setups, a lot of different roadmaps, right? And it can get confusing, and it can bring to a sense of fame, right? A sense of I know more than you, whatever it is, right? Whatever it brings that it should not be bringing, because we understand that if the wave isn't there, then we're not surfing, right? If it is not there and I don't know what I'm looking at, then I'm gonna let structure develop. It is as simple as that, right? But traders get into this mentality to where they see this move to the downside right here, and then they say stop loss, right? They put their stop loss, whatever it is. But where's the most external point? They're like, oh, it's not going to go past this, right? I made a huge move. Where's that at? Right here, at this high. So now that high becomes liquidity, right? It becomes a narrative to now break structure to the upside. It becomes a reason to break structure to the upside. They're getting in shorts, 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 putting their stops at this high and this high right here. But let's look to the left. What do we have? More equal highs, right? More buy side liquidity with a bullish narrative. This is where we can start to get into the flip side, right? Now I have a break to the upside. I'm still bullish. It's still respecting demand. So I'm going to continue to take that to the upside, right? Until I'm proven wrong. So understanding that we would have flipped this, right? Instead of going short, putting your stops at this high, and then this high over here, or even trying to take it all the way up here, right? Shorting in discount, trying to catch a top when you don't need this move, right? We do not need this entire move to the downside right here. We could have taken a move like this on lower time frames, even on seconds, right? With a very good risk management system, and end up getting 5-to-1s within 1 to 2 minute candles, right? It is possible. I'm not gonna sit here and say that it is not, but it is possible. But looking at these situations to where we can get confused as traders and say, I'm going to short this instead of long this, right? We need to understand our structural narrative and understand that literally to go up, we have to come down. To go down, we have to go up, right? That doesn't mean that we have to come down and mitigate this demand candle every time. It just means we need to take out the early longs before continuation higher. For the other way, it just means we need to take out early shorts before continuation to the downside, right? That's it. So that's why after a mitigation of my zone or whatever it is, I will say I'm waiting for the early longs or the early shorts to get taken out of their trades. I'll wait for the footprint, and now I have a very, very confirmed entry that I can end up getting into. But let's see that delivery now into these areas higher, the supply zone that we had talked about, right? Price uses that as now liquidity or a reason to come higher. Takes it out to the upside. I now have another structure break, another introduction of demand, right? This is where traders get very confused. Now let's watch that delivery up into these areas. Price moves up into this area. Shorts start to get into trades. They see this move to the downside on this candle right here, this hourly close. They see this close. They're like, I'm taking this to the downside, right? Where are the early shorts? Boom. Early shorts are taken out of their trades. Those equal highs are taken out right here. Supply is mitigated. Our area is mitigated. And then the move comes. It's literally it, right? It's as simple as it is. Just be patient. Just understand when that footprint is going to come into place, when the early longs and the early shorts are taken out of their trades, and then you can start to get into your own. But once we came into this area and started to deliver into this area, and let me bring this back a little bit farther. You can look at this from multiple perspectives, right? Throw on the session times, whatever it is. But I'm looking at this from a supply and demand and Wyckoff perspective for the confirmation. But once we come into this area, we're looking for those early shorts to get taken out, and then we're looking for that break of structure to the downside. So we could look at a 5-minute chart at this point in time. But we didn't catch it up here. I caught it down here, much lower. And we'll talk about why. So looking at the 15-minute chart, price comes up, raids that high, and then after the high is raided, we're watching structure as it is developing. We see that displacement to the downside, right? So our area of supply is now created. And then we get continuation to the downside. And many traders are like, okay, now that this has occurred, candle before candle, right, I'm going to enter on this. Which is completely fine. We'll wait for a price to come back into this area, take out all the early shorts, and then continue to the downside. But if we want to catch that continuation for this move of the day, right, into areas lower down here, then we need to understand how it is occurring. Got a 5-minute or a 15-minute structure break right here. All right, we're watching the 5 now at this point in time. Then we start to consolidate, right? And this is where I was on the 1 minute. So let's just bring this back. All right, we got multiple breaks of structures downside. Then we had our areas that were created, and let's watch the 1 minute as we now approach these areas that broke structure to the downside. So we now have a displacement, right, from our structure breaks to the downside. Let's look at the range break right here, right, area of displacement. So this shows me a lot of ability to want to continue to the downside within this candle right here, right? So let's watch it now. And then we get that displacement, we mitigate this candle, and then I'm looking for that continuation to the downside. I'm going to go ahead and actually throw up my groups just so I can do this better for you guys as it occurred today. But yeah, so we're at this point in time now. And let's watch our structure again. We are still bullish. From this break of structure internally to the upside, we are still bullish, right, from this low that caused this high right here. So I was on these seconds at this point in time. We'll look at the time as well. And as we came into these areas, came into these lows, right, we took out these lows, we started to create that buy side liquidity. We had our first break of structure right here, right, and then we had our second break with impulse. Your candle before that candle obviously lies right here. Price respected that, continued to the upside. So after your liquidity raid, right, whereas your imbalance, your classic ICT setup, liquidity raid to the downside, break of structure to the upside, imbalance, hit the 50% almost perfectly. Let's draw this out. Right, up into these areas, hit the 50% of that,
Yeah, what's up?
Yo, are you gonna be?
Low, low. Anyway, we tapped this, right? Mitigated this area of fair value. That after following the liquidity rate and breaker structure to the upside, confirmed that once we broke to the upside again, your candle before candle is given, and then we are looking for that delivery up into these areas of supply, right? So at this point in time, right, and I'm just gonna throw on the TA. I was looking for longs, right? As that occurred up into this area of supply. Why was I looking for longs, right? Because my narrative was still being shown, and I now had a higher time frame break of structure to the downside, creation of supply. So after the liquidity rate and break of structure to the upside and creation of demand, I'm looking for the reason to now come up into the supply. See, this is where we can start to get that narrative and start to get multiple plays within one swing, right? Or within one idea. Because now I have a setup that I want to take to the downside, right? I want to take this to the downside overall. But now that I have a setup and a narrative, I can start to play that roadmap, play that narrative, play the story as it is developing, right? So let's just take this away. And let's watch now this price action. But it was at this point in time that we had buy side liquidity at these highs right here, and then I was looking for that delivery up into that supply zone because I wanted to take it to the downside right here, right? So that first take profit, right, lied at these areas right here, and then after that had occurred, we are looking for the delivery up into these highs, up into the supply zone. So let's go ahead and play it out now. We're watching price, right? Watching price is starting to deliver. It doesn't look very healthy, but structure is still bullish, right? Obviously, we're looking for the downside overall. All right, so as this occurred, we're watching the move up. Price starts to move up into these areas, right? And then it takes out the highs. And this is where I was very interested and very interested in general. But looking at this, right, as we take out the highs, we're looking for that area of supply, right? But what happens instead? We don't create supply. Instead, we raid the highs, or sorry, we don't mitigate supply. Instead, we raid the highs and create supply, right? From that break of structure, let's look at the minute. From the break of structure to the downside, right? So if we're looking for the first institutional candle after the liquidity raid, right, for the mitigation of that, this play occurred here. So this was your first area, first general narrative that we could have looked to enter to get into. Then after that occurred, right, after we can get the confirmation of that, then we have that now second trade, right, that confirmed entry, that candle before candle entry. So we get our first breaker structure to the downside, show of supply after rating the highs, taking out the buy side liquidity, taking out the early shorts. We come up into that, mitigate that, right? So now we are in this trade. If you took this trade with a little bit more risk, completely up to you, right? However you are looking to play it. But now again, we are waiting for early shorts to be taken out on lower time frames. So we're looking for a liquidity rate on lower time frames. We get a liquidity rate on lower time frames. Take out the highs, right? Again, now we're looking for the break of structure. There's your highs that are taken out on this move right here. You get your break of structure. The reason I chose this, okay, the reason I chose this, and I believe I can go into seconds because this was just today. Yeah, but the reason I chose this area is this is where that demand was sponsored that pushed that price higher. So your liquidity rate was to the downside here, right? But where was demand introduced to then push this price to the upside up into this institutional candle, this area of supply here, right? That occurred from this move right here. So once this was broken to the downside, right, on the minute time frame, I now had that area of supply. So I'm looking for the confirmation now. That double breaker structure. I now have that area of supply, this candle before this candle, right? And then I can look for the confirmation of that. So we'll wait it out. We get that displacement candle to the downside now. That double market structure break. Remember, we talked about the M's and the W's. The M's for your distribution, right? The market maker M's and the market maker W's for your accumulation, right? Just to keep it simple for the introduction of supply or demand. We now have our area of supply. We now have an entry on the 1 minute. and then we'll look for when we went break even, right? So now that we have the idea, the setup, the narrative, let's go ahead and look for the take profits as well. From this low to this high right here, we can draw out our premium to discount, right? Where's the area of discount with the sell side liquidity, right? With unmitigated institutional candles. Where's that at, right? We'll look at this and I'll say, okay, this high was made right here. I still have areas of imbalance right here. Okay, I have a rally based rally here as well. Area of demand. Let's go on higher time frames. Oh, it's the 4-hour candle before candle that pushed price over highs that cause new lows. So, okay, I have a demand zone here as well. This is where I will take it to. This is my most feasible area before I have the full confirmation of downsides. Draw this out like this. Bring this out just a little bit. We'll go down to the lower time frames again. So targeting now that area of demand, right? As well as equal lows. So I now have multiple structural narratives coming into play, giving me a reason, right? Giving me multiple reasons, multiple confluences. I now have the entry that is present and available. And then we are now watching for price to mitigate that. Mitigates that area of institution and then immediately breaks structure to the downside. And this is the point in time after I believe these lows were taken out that I ended up going break even. So within roughly 4 minutes I was break even on this trade, looking at about a 4-to-1 R&R in roughly 4 minutes. Not bad at all, right? What we are looking for as institutional traders, as my personal way of trying to make money in this market, right? But once we get that first break to structure downside, mitigation of the institutional candle, we have our structural narrative overall, right? We want to see the continuation now. So we see more supply created down into our areas of demand. We're looking for the continuation into these lower areas, the 4-hour demand that we had, right? We end up mitigating that area, and we are now completely out of our trade. 15-to-1 is done, right? And we're good to go. Trades end up lasting about 36 minutes. You got 15% on your port. Good to go, right? I'm done for the week. I'm done for 2 weeks at that point in time. These are the situations that we want to occur, and this is why I wait. This is why I maintain patience, and this is why I do all of this analysis up until this point in time, because then I have the ability to make a lot more in a lot less time. I have the ability to break even quicker, and I have the ability to know if I'm wrong quicker. That's just personally how I like to look at it, right? But this is what we are looking for. So we have our structural narrative. We have the reason to follow that structural narrative, and then we're looking for the confirmation. Confirmation is given. We're now in our trade, entering our structural narrative. So that was XAU, right? The continuation, looking for that same exact thing. And then now let's go ahead and go to GU. I'm not going to talk about this one a lot because we're going to go over this one probably next week as well, because there's a lot that I want to go over with GU. But same thing with continuation theory. 80% of retail has been long on this ever since this move to the upside right here. They have said long, 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 long. What do they see, right? They look at higher time frames, a weekly, daily, right? Whatever it is, and they see this. You see breakout to the upside, mitigation, higher low, right? Continuation to the upside. They are constantly longing this after they believe this was your breakout, right? They said, okay, breakout to the upside right here. And then after that occurred, right, they're like, demand, take this to the upside, long here, long here, long here, long here. They are the literal reason their stop losses, right, all that liquidity, all of these longs are the literal reason that price continues to go to the downside. That price continues to show that bearish narrative from its first overall bearish narrative, right? So let me just get rid of all of these. Delete those. Delete this. We'll just look at the lower time frames. But instead of getting in this idea that we want to catch the bottom or catch the large move because of what we see, right? Just understand our structural narrative for the day, for the week, where the daily wants to draw to, And then we can start to get in and out of trades that way and start to understand our behavior of the certain narrative that we are in. But in these certain situations where traders see a large impulse, right, to the upside, they can get very blinded. We don't want that. We want the ability to stay fluent and stay very unbiased when learning to get into our trades. Once your setup comes, right, once that wave appears, then go for it. There is no still bias, right, as far as it goes. You're not sitting there and saying it has to go short, it has to go short, it has to go short, right? It doesn't have to do anything necessarily. You just need to risk manage. You have to risk manage. That's the only thing you have to do. It does not have to do anything. It's going to do what it wants to do, right? It's going to deliver where it wants to deliver. Um, and we can use those areas of liquidity to start to get the idea of where that is going to go. But understanding that on higher time frames, right? People see these impulsive moves to the upside and they just see breakout, 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 breakout. But if we look at this from that institutional perspective, we can see that prices clearly, right, making lower highs and lower lows. We created a new low right here. What sponsored that, right? This high right here, this area of distribution. What happened when we came up into that area of distribution, which is in premium, right? What happened when we came up into premium? Into the distribution, that area of supply that caused this new low. We mitigated it, broke structure to the downside, right? We see that structure break to the downside. So now that that has occurred, and now that all of the early shorts, all of this liquidity available in the form of equal highs, right, has been taken out of their trades, right? We get that mitigation, the liquidation, the sponsorship, and then we now have the entry. We are now targeting that next structural narrative, right? We're still looking for now this overall weak low. So instead of saying, I want to take this to the upside because look at all of this space, right? Look at this unmitigated supply here. Look at this liquidity here. These equal highs, whatever it is, right? Whatever you're telling yourself, whatever you're trying to make yourself believe that just simply is not there, those what if situations, right? Instead of taking that into heart, just literally study the charts, literally go on here to your TA as far as your supply and demand zones. Look for what we look for as an institutional trader, and then if it doesn't come into play, then you have no trade. Because with this ability, right, we showed the 1 to 15 with the ability to make that type of capital within that amount of time. Why are you trading? Why are you over trading every single day, right? Why are you trying to sit down to the charts every single day and try to catch a trade every single day if you just made 10 to 15%, or if you just made 5%, if you made 2.5% in one day? Why are you trying to take more trades? If I'm going to be completely honest, right? We need to sit down and really look at ourselves in the mirror and try to get committed to a profitable system and not get committed to being the best trader, right? Because it's not a competition. It is not a competition. It is a mirror of yourself, is a reflection of yourself, how you view the world, how greedy you are, how non-greedy you are, whatever it is, right? It is a very, very, very present life teaching tool, and that's why I love trading. Um, but looking at that, right, from those perspectives is going to give us a lot of less stress, because now I don't have to worry about being right. I don't have to worry about catching a bottom. I don't have to worry about catching a top. I don't have to worry about trading every single day. I just need to worry about my setup coming into play and me entering the trade and walking away. And I need to worry about my structural narrative as far as take profits go, right? If I'm not trying to take it to the moon or take it to hell, whatever it is, right? I need to have relevant take profits. I need to understand that as well, right? I need to follow my rules and stick to my rules until I am proven wrong. It's exactly how we look at every single situation, and that goes with the disproval theory and continuation theory. You can do the technicals into the psychological side of it as well, right? That it's very, very seems very, very complicated, right? But when we can sit down and create that system for ourselves that we know will work every single time if we are following our rules, right? Then it gives us comfortability and the ability to walk away from the charts, the ability to take one trade a week, the ability to take one trade a month, right? It gives us much more opportunity within the space than we ever thought we had before. But with that GU statement, with that continuation theory statement, we're going to go ahead and look at, I believe it was US 30, yes. We'll look at US 32. I kind of want to show you guys that. But don't get caught in these situations. Don't try to take this to the upside. You don't need to catch the bottom. Who said you had to catch this move to the upside, right? This is obviously a weekly chart, so everyone looks at this and says, break a structure, right? Break a structure. We just liquidated lows. We mitigated this institutional candle that brought this high, right? They're making up certain situations that just simply aren't there. They're trying to surf a wave that just simply is not there. You cannot surf. But looking at this, we talked about that. We'll go ahead and go to US 30 now. Very similar situation that we had occur within this range right here. Right, we talked about, I'm not sure if we talked about this long. Doesn't really matter if we did or not. This was a while ago. But the disapproval theory, right, as we're continuously making highs, higher low, higher high, higher low, higher high, higher low, higher high. Next area of demand broke into the downside. Area of supply now that broke that to the downside. Yep, we come into that institutional candle, start to move downside, break structure, create supply, and then we move lower into our area of now demand, right? That caused this original breakout to the upside. But same type of situation here. On higher time frames, right? This was your low that caused this high after the liquidation rate mitigation of demand, right? So this is your area of discount as well as your unmitigated demand that had caused this new high overall. After we break structure to the downside, start to pull back into those areas, what are we doing right before? Manipulating lows, right? Taking out the lows, leaving highs, leaving clean highs. After we break structure to the upside, after the liquidation rate, we create demand, and then we start to see that continuation higher. Right? Same exact thing right here. Break structure to the upside, come into these areas, and this was we'll look at the hourly candle so I can make this cleaner for you guys, but we liquidate all the early longs, mitigate the area that caused the break of structure to the upside overall, right? We break structure. Here's your candle before that candle, your area of demand. It was refined down to the lower time frames, right? But then you get that final move following your accumulation, right? That occurs coming into these zones. This is the ability to now we get into these trades. We see the structural narrative, right? Set up. We're looking at it like this. And then we look for those areas of supply from what caused this move to the downside now, right? Up into these areas. But then so I'm holding this trade up into these areas, right? And then it reaccumulates and starts to break higher. I have now caught a bottom. That's great, right? That's how we catch bottoms and that's how we catch tops, is by looking at our structural narrative, getting into the trade, and taking it to feasible take profits. If you catch the bottom, then great. If you catch the top, then great, right? But we don't need to, is what we're saying, right? We don't need to catch tops. We don't need to catch bottoms. We can wait for this to show the impulsive move to the upside, right? That second break of structure to the upside. We'll look for that candle before that, right? So after you have your first move to the upside right here, you get the second break with impulse. You could look at it as this one, or even the one after, but I would take this institutional candle here after this impulsive break to the upside, right? But we have those clean lows that are created, more late longs at this point in time trying to get in trades, take this to the upside, and then once those are liquidated, right, on lower time frames, we'll watch what happens when we come into those areas. So we break structure to the upside right now. We're looking for that area of demand that caused that. It comes into that area of demand. Right? What does this candle do? What does this candle do? Gets everybody into shorts. But we're in discount, mitigating area of demand, and then what happens after? Bullish engulfing. So now that everybody is shorting this, taking this to the downside and leaving all this buy side liquidity available, we now have the reason to continue higher. We break structure to the upside after coming into that area, right, with impulse. Where's your candle before the candle that did that, right? Boom, it's right here. Comes into that area of demand, break structure to the upside again. right? We see that wick up into that area, looking for the institutional candle now in lower time frames, or we could go to the 1. This occurs, but we see another reaccumulation that occurs, so price creates those lows, right? Break structure to the upside, and then distributes to then accumulate. So if I can replay this, bring this back to around right here, we can go to the seconds, look at this. And then see, right, that distribution to then accumulation, that distribution to then us manipulating lows and breaking structure to the upside, right? Coming down to those areas, breaking structure to the upside, and then continuing to create demand and moving higher, right? So when everybody is looking for shorts in the bottom of discount, right, as they're trying to take the breakout trade to the downside because it looks heavy due to gravity, whatever it is, right? However they're trying to play it, um, we're looking for our structural narrative. We see that break. We're looking for our first week high, right, as our take profit, and then the overall, right? You could take it like this, but I would be looking for this overall high right here. Why? Because this low, right, from this liquidation rate mitigation of demand caused this high. So this is your week high that we are looking for price to deliver to, along with liquidity, right? More reasoning. Let's look at this now. All right. Equal highs, relative equal highs within these areas, more reasoning to continue to the upside, right? So now that the narrative is in place, you're able to enter trades, right? Targeting those areas higher. What happens? Delivers right to it, right? And then I believe we're around there right now. Just gonna go ahead and put yeah. So we're around there right now, but it's that same exact theory, right? As long as we're still bullish within discount, breaking structure to the upside, respecting demand, I'm looking for trades to the upside, targeting buy side liquidity because that's the overall narrative, right? But with that being said, that was pretty much everything that I had for you guys today. Is there any questions or anything like that? I'm gonna go ahead and check the chats right now. Apologies that I wasn't looking through before. I don't think there were any questions or anything like that though. But if anyone has them right now, feel free to unmute your mic and go ahead and ask. Or you can put it in stream chat wherever you guys decide. Um, but with that being said, that was pretty much all I had for you guys today. The real main message, right, is to study the markets, follow the markets, and not try to will the market into your direction because it's not going to. It's not no matter how hard you sit there and stare at it and try to will it and sit there for hours and try to come up with situations, right? If this then that, maybe if I do this, whatever it is, right? It will move how it is going to move based on the structural delivery of liquidity, right? It is not going to move based on how long you did your TA. It is not going to move based on anything like that, right? We need to drill that into our heads, and we need to continue to look for what is respected and what is manipulated. And that will give us the ability to now become confident in looking for the same thing over and over again. And then once that is given, we are entering our trade and we are in and out with ease. But yeah, that was pretty much everything I had for you guys. This was recorded and will be posted to the YouTube. I'm gonna go ahead and post the Bitcoin and E sentiments probably as well. But coming into the weekend, we have Powell tomorrow. Should be some volatility coming into the market. I personally have stopped trading Fridays. As I don't like the illiquidness, and with Forex, obviously we close at 6 p.m. Eastern on Fridays into the weekend and reopen at 12 or on Sunday at 6 p.m. Eastern as well. But I have stopped trading those Fridays, so I'm not looking at the charts of the weekend, and I don't think a lot of you guys should be personally as well. That's completely fine if you do. If you do, go ahead and back test, do whatever you got to do, right? But personally, I don't look to trade weekends at is straight algorithms, right, up and down. You're just gonna give yourself a headache. Personally, you can trade them, right, but you're just gonna sit there and give yourself a headache. I would rather wait until there's more liquidity within the market for the larger moves, so then I could start to get into trades as well. But with that being said, again, I appreciate everybody who had popped out tonight, everybody who sat there and listened to me ramble, yell at you guys, and tried to get this drilled into your head, right? Tried to get the things that these lessons that I had to teach myself, right, to you guys, so it makes it a lot simpler, and we don't have to get into these situations to where we are very confused and feel like we're wrong and feel like we're not doing it right. Um, But yeah, like I said, again, I appreciate everybody who had popped out. Gonna go ahead and end it here now. I'll stop the recording as well, and I will see you guys later. You guys have a great night or
Don't
day.
get fucked.
Do not get liquidated. If you get liquidated, don't let me know. Cause then me and Iron Mike are coming for your head.
For sure. I'll see you later, Flo. You
All
going
right,
to sleep
brother.
right now?
I'm not. I'm gonna upload this and then probably end up going to bed after that. But yeah, yeah,
I'm
yeah.
gonna be looking. I'm gonna be looking at EU, AU, and UJ.
UJ I like. I've been watching UJ actually.
Yes,
UJ I
I've been
really
loving
like.
UJ. But I'm
UJ's been
waiting
moving
after
nasty.
FOMC. Yeah, I'm waiting for after FOMC or Jack Hole, Jackson
Yeah,
Hole. Yeah,
I
I
want
need
to.
to wait for so we don't get
I
fucked.
agree. I agree. I think we could see. I think we see the move next week. If I'm gonna be completely honest, overall. But
I agree.
I do like it. I really do like the setup that's formulating. Waiting for this one,
Busy.
for sure, for sure.
I'll see you in the other place.
All right, sounds good, brother. I appreciate all of you again. And I'll catch you later. Peace, peace.